Hello and welcome to the Prepare to Compete podcast. We talk all things VA benefits, real estate, entrepreneurship, and more. Kenneth Davis, how you feeling today, my brother?
Oh man, I'm blessed and ready to serve here. Blessed and ready to serve our veteran community.
Absolutely, man, absolutely. So, I got the blazer on, I'm feeling real estate agent type today, right? So we're going to get into that real estate segment, man. I know I've been posting some stuff on Real Estate Sunday School. You have real estate questions, definitely like, subscribe, comment down below. We definitely want to start growing that base with our veteran community. I know you guys know us from the Service Connection, and you guys have a lot of questions and concerns about that. But, real estate is part of the pillars of building wealth and building your finances. So I always want to definitely make sure our veteran community is educated on that. So please ask any questions that you may have regarding that. And Kenneth will definitely help with certain issues in regards to Service Connection and how that actually applies to you actually purchasing real estate with your VA loan.
Yeah. Just navigating those waterways. I think a lot of veterans probably wait a little bit too late, right? So we obviously want to rely on you to give us kind of the pull back of the curtain to understand what's going on in the real estate market, right? So at the end of the day, many veterans are deployed overseas and want to make sure their family is in a very stable environment for the most part. We talk about the Department of Defense providing a secure home for our family, but again, is that going to put you in a position to build your wealth? Probably not, because you're obviously giving it back, but I'm sure Mr. Jones here can kind of navigate how you can be able to purchase and also make sure you also build wealth throughout those purchases as well, right?
Absolutely. Definitely. We'll kind of break that down for us. Today, what we're going to be discussing is, pretty much buying a home day after discharge, right? That's the kind of the thumbnail title you guys saw. You're curious on really what that means. And what we're talking about today is buying a home right after service, right? How do you actually prepare for that transition? Oftentimes you may be relocating. Maybe you were stationed somewhere and now you're moving to another state. Of course, the military was your employer. Now you have to seek new employment, all these different things. Is it even possible to purchase a home right after you got out of service? We're here to break that all down for you here today.
Yes, sir. Yes, sir. Just uncovering and unveiling all of that. It's just really exciting. It's really exciting because being in the military, as a young sailor or young soldier, I can't stress of all the, let's just put it out, the dumb purchases that are made, right? Rather than actually purchasing something that's going to grow with you, right? So put the iPhones down. No need to go ahead and run out there. Again, Apple has many products. We love Apple, by the way. But just giving an example, there are certain things that you probably can do without that's going to put you in a position for you and your family for a lifetime.
Absolutely. Don't buy a big TV like this if you can't afford it just yet, right? Wait on that. And life is a marathon, right? We often teach about that. And just wait your turn, right? It's your journey. Don't feel like you have to rush to do anything. Just pace yourself. It's a marathon. And that's kind of what Kenneth is alluding to there. You have purchases, you go out, buy the new iPhone, buy a big TV, Black Friday sale, all these kind of things. And you look back on how that money could have compounded for you if you would have invested it in real estate and different things of that nature. So when we're talking about the home purchase and especially the VA loan, what I want you to primarily know is that yes, you can utilize the VA loan while you're in service. Hopefully you guys took advantage of that. Now, if you did utilize your VA loan while in service, you can utilize your VA loan more than once. So I just want to set that foundation out for that you can do that. There's a lot of factors on how to do that. we have other videos that kind of delve into that. But the main issue that I want to quickly discuss for you guys today is that what are the components that you need to actually purchase a home after you get out of service, right? So now going into 2024, there's a lot of new regulations. So you might have things that you believed in the past as far as 2-year job history. Can you actually purchase a home as a business owner without having a W-2 income and things of that nature? Well, all of that is changing. So I'm not going to go into the details of that. If those are your circumstances, definitely reach out to me and I'll be able to kind of consult you on an individualized basis to really get into your particular needs. But no, you can actually purchase a home without actually having that 2-year job history if you getting out of service and now you're a business owner, right? You started that business while you're in service. There's a lot of different programs that are able to do that. They know that a lot of our veterans are starting their own business, right? Because you have veterans where you acquire so many skills in service. You started a business while you're still in service. That was kind of a side thing while you're in service. And now you're going towards that full time, right? So we definitely want to make sure that you can get a home. So they will look at your job history. Now, if you are still active duty right now and you're considering buying a home and you're still looking to stay where you currently are, I would, if you have the option, recommend buying a home while you're still in service, right? Before you transition out, because I'm going to let you know it's not impossible to purchase a home day after discharge, right? But it's not easy either, right? It may come with, a lot more scrutiny and a lot more questions. But so if you are still active duty and you're on the fence and you're wondering about the interest rates and things, and that was kind of steering you away from it, go ahead and look at our video that we actually made about the VA loan streamline refinance. That's a program you can utilize, right? So if you purchase a home now and interest rates go down significantly, you can go ahead and refinance that into that lower interest rate. Very minimal effort and minimal fees, which is most important for our veterans. So now when you are purchasing a home, they're going to be looking at your job history. So they're going to be looking at that, right? So the main thing, especially even when they were talking about the job history of 2 years, even when that was like a major thing, now it's got a little bit more relaxed, but you want to consider what your job was in service, right? So Kenneth, what was your job in service?
Well, I was aviation supply.
Okay.
I worked aviation supply. So, yeah, I was kind of heavily in, the logistics.
Exactly. Okay, so Kenneth was in logistics, and I wanted to utilize that as an example, right? So let's say Kenneth was in logistics while he was in service. Okay, and now he went and got another position doing the same thing outside of service, right? Right after he discharged. Well, that work experience in that industry still continues on. So it's not like you have to reset with your job history because you're still working within that same industry, right? Mm-hmm. So that might be something to consider for veterans who may have a few different job options and you're contemplating purchasing a home. Well, if you take that job option that's very similar in that same industry that you've already been working, it's going to help you when you're applying for that mortgage application, okay? So that's going to be extremely important there. In other instances, let's say you worked as a medic and different things like that, and now you're going into being a fireman or going into nursing and different things like that. There's a lot of exceptions and stuff made for those type of career fields. And another gem that I'm going to give you guys regarding that, whether it's for you or your spouse going on a loan together, when you are actually in nursing school, okay? So not just taking your prereqs, but in nursing school, and then you actually get your RN license and you start actually working as a nurse, they actually count your job history of that time where you actually been educated in that field, okay? So whether it's nursing or whether it's any other trade that you may be pursuing, they will count that as work time in that field. So you want to be mindful of that as well.
Yeah, no, most definitely. Because, I do hear that now, but Now, let me ask, are there certain restrictions with certain lenders, or is it just that's kind of the common thread amongst the community?
Okay. Yeah, absolutely. So now each lender can put on their different overlays and their different requirements for that particular lender. That's why I always ask my clients to go ahead and fill out an application with at least 2 or even 3 different lenders so that they can understand the different options, products, and programs. Because you may see all the lenders are offering a VA loan, right? They all have that product in their arsenal, but some lenders may have different overlays and different stringent requirements as far as putting a minimum credit score and not looking at work experience the same way, and a lot of different things. Even we have veterans that want to actually buy land to build homes, right?
Yeah.
And definitely most lenders don't cover that with the VA loan. So if you ask a lender that don't have that particular product, they'll tell you no, and you will think you can't do that with the VA loan, and in fact you can.
Oh wow, yeah. And I think it's a real good point to stress as well that a lot of these requirements, they're not because of the VA, right? The VA is more or less looking to make sure that the veteran is kind of pushed into the home and put in a good home for your family. But they're not trying to prevent you from getting into a home or getting the loan for necessary fact. They're mainly making sure that you're protected. Because again, the home purchase is one of the largest purchases that you're ever going to make in your life, for the most part, right? But another thing as well is, again, regulations are also in protection of. And I think a lot of lenders that you would necessarily want to get information from or get a loan from, make sure that they understand the VA loan, right? I think that's a huge component as well.
Absolutely. Very, very much so a huge component. So you want to make sure they understand the VA loan, and you just want to make sure that you stay educated on what your options are as well. And another point that we want to cover here is just what type of income qualifies, right? So let's say you're married, okay, and you want to utilize your spouse on a loan, or even if you aren't married and you want to buy the home with somebody else that's occupying it, you can go ahead and actually put them on a loan as well. If it's a girlfriend, I don't know if I personally advise it, but it's an option, right? You definitely have the option to do so, and you can add that income. But some other income that you might have is from any service-connected disability benefits that you're receiving, right? And that income is very good because they're not taking taxes out of that, right? So you're getting that full amount, and also there's no minimum vesting time. So what I mean by that is that do you have to receive that for 1 year, 2 years? No. The day you get out and the day you actually are awarded those benefits, your lender could actually utilize that towards your calculation for your debt to income ratio.
So let me back that up a little bit, because as a veteran myself, I want to kind of understand that, right? So if I'm a veteran and I have transitioned out of service and I am currently in school with a job on the way of that time that again, my work history from school and also my work history from the military, but I receive my disability benefits. So you're saying that they would, because from my understanding, you would need a little bit of time at that job before utilizing that income. So you're saying your benefits, you don't need that time?
The benefits, you need 0 time with those benefits. So
oh, wow.
As long as you're receiving those benefits, you have that award letter, you can go ahead and show them that. Even before you actually got that first deposit, right? Because on there it'll show the amount. And then, of course, once you get that, you would just show them the direct deposit or the check thereafter and where it came from. And as long as they know that's a permanent entitlement, they'll definitely be able to utilize that. So in those type of situations, let's say you're 100% service connected, you might be getting a hefty amount monthly, and you may be able to qualify for a home purchase depending on the price of the home, just utilizing those benefits. And
kind of, going back to that is, again, because most isn't, at that at that rating or decision, right? I think even if you're 30%, 50%, that is still a pretty good amount that you can go utilize towards a home purchase. So definitely with the rising interest rates, but also as we talked about in other segments of our shows, that the benefits are also rising as well. So now you can kind of almost offset it, right?
Yeah, absolutely. And understand that number is kind of grossed up in a sense, right? Because if you're thinking about, let's say you get $2,500 a month, right? And somebody else has a job where they're making $2,500 a month. Well, they're not bringing home $2,500, right? They have taxes that are going there. They have insurance, different things of that nature. They might only be bringing home $1,700 from that. You're bringing home that whole $2,500 from that payment. So that factors in there, and that's that can lead to significant increase in the home that you can do when you combine that with your income and or your spouse's income.
Wow. Listen, that's just knowing so many people that have attempted to purchase homes and just had many bad experiences, and there's just so much content out here when we're talking about bad experiences with the VA loan or just with any loan product. That's just valuable information. So when we're talking about consideration, that's all. Again, I know you mentioned that that you take your buyers always kind of navigating and making sure that they understand to go through the process of shopping lenders, right? But could you elaborate on why you do that?
Absolutely. Great question. So I do it for a few reasons. One is that different lenders are going to have different products, programs, and then overlays. So for example, you may be a business owner, and some lenders may look at your income and they're like, hey, the loan is too risky for us. Or they may look at your debt to income ratio and say, it's too high for us, right? But it's not too high for the loan product. It's just too high for them to feel confidently in taking on that loan product. So they just won't do it. So I do it for that reason. Also do it for the benefit of just shopping interest rates, right? Because when you actually force lenders to compete, they prepare to compete, just like the podcast says, right? Because if you only get one lender that you're working with and they tell you this is the interest rate and you don't shop around, well, they may have not gave you the best that they could, right? Because ultimately, they have a job to do. They're trying to make as much money for their companies as they can as well. And it's not even just your particular lender. You got to understand it's a whole corporation, right? So once you actually say you have a lower rate from a competitor, then now they can go into their supervisor and say, hey, we're going to potentially lose this client. Is there anything else we can do to keep them, right? And they'll try to go through the motions and do whatever they can. So you might enter that scenario where one lender told you 7%, and then the other one said 6.5, and then you go back, and then, the 7% say I could do 6, and it's like, do I got 5? And now it's like a whole bidding war for your business. So that's another reason why you want to do that. And then oftentimes the third reason, it gets a little bit more complex, is that there's different types of lenders, right? So you have lenders like your Wells Fargo's, right, and your even Navy Federals, which is a small community bank. They often they have their different risk levels, right? And then you have regular brokers, right, which is very good to work with the broker a lot of times because they're shopping your loan with their different companies that they work with, right? So if you go to a broker, they're pretty much going to shop you around to 3 to 5 different providers anyway. So I usually tell my clients to go to a broker, to go to a credit union, just a regular credit union, local credit union, and then also look at like your Navy Federal as well, credit union, because they usually have a lot of favorable programs and rates as well. But then if you have like a particular lender that works for a particular company, shop them in there. But the main two that I want to make sure that you pursue is going to a credit union, any credit union, and going with the actual mortgage broker. So you want to ask your lender, like, hey, are you a broker? Are you shopping my loan for the best rate? Or is it just your company doing in-house financing? Because some companies do the in-house financing themselves, and then, they might sell it off or whatever, but they actually fund the loans themselves. So now they could have less overlays and they have more creativity on things that they can do because they can get the loan closed and they actually worry about selling it after closing.
Okay. Yeah. So basically what we're saying is that, or what you're saying is mainly make sure we shop around for lenders, but sounds like one major corporation, broker, and more or less almost a credit union or local bank to kind of be able to get the best products.
Absolutely. Those going to be your 3 tiers that you want to go to. And, again, they're going to have different options. You want to definitely like and respect the institution that you're working with, but also it's normally a lot of times an individual relationship, right?
True.
Sometimes with certain credit unions and big banks, it makes it harder to build that relationship, but it's not impossible. You have big corporations where they have great representatives where you build a rapport with them and they go to bat for you and make sure you get your loan funded. So you just want to talk to them and see what's going on. Absolutely, Kenneth. I appreciate all the questions, and I definitely want to elaborate on the point of how important it is to really build those relationships, right? Whether it's credit union, large bank, broker, a lot of times your local representatives, you want to make sure they have local representation and you just build in a good relationship with them. Because again, they're going to go to bat for you if you do that. I even have a personal story about that myself where, obviously as a real estate agent and, a W-2 employee at the same time, my finances are all over the place, right? And you got student loans, different things of that nature. And during the time of 2021, I was trying to purchase a home for me and my family, and the lender that I actually already had a loan with, right? They're calling people to refinance, different things of that nature, and I'm like, well, yeah, I'm not refinancing that property. I have tenants in that property now, all this and all that. But I'm like, yeah, I'm interested in buying another home. Do you guys, can you do that? It's like, yeah, I could do that. I let them know my situation. I'm like, look, I'm an agent myself, right? So I know the industry. I know all of this type of stuff. I got these different things going on, bam, student loans, all this type of stuff. Hey, can you do it? It's like, yeah, I could do it. Send me all your stuff. Boom, boom, boom. It's like, okay. I think I got into escrow, right? I got into escrow, found a place, everything like that. And it was like, yeah, I won't be able to fund this loan.
Oh, man. Wow.
Exactly. It's like, are you serious? It's like, I already have a loan with you guys, right? So I'm already a customer. Obviously, that mortgage has been paid on time for years, different things of that nature. And you told me you could do something and now you can't, right? So that's the value of relationships. Obviously, I'm in the real estate industry, so I know different lenders personally. And I called somebody I knew personally, and they were able to quickly service the loan. And
that's good.
Ultimately, what it came down to is that because during that time, so many people were refinancing during COVID, and the interest rates were very low, so they were doing that. He didn't really want to take the time to deal with my student loans and all the extra paperwork that came with that, right? So it wasn't that they necessarily couldn't do the loan. They probably could have, right? It met all the regular guidelines, conventional loan, all that sort of thing. But it was just like, am I going to waste my time on all this paperwork for what I'm getting on this? Or I'm going to just go to get 5 other refinances, right? That was easy.
So basically they were going after the money grab situation and what they can receive. And again, yours was probably a little bit more difficult, right?
Yeah, it was a little bit more difficult. They didn't want to deal with the self-employed. They didn't want to deal with any of that. So they just was like, I can't do it. And again, I was already in escrow. So could you imagine, I'm planning on moving, relocating my family to a different home. And it's like, I'm going to lose this property. It's already hard enough to get into escrow during this time, especially when, people are having bidding wars where they're spending 20, 30, 40,000 over list price.
Yeah. At that time, you couldn't find a house. It didn't matter if you didn't have the capital to put down. It was just done. So, but going back to obviously the circumstances you were going through, but from my understanding, a lot of veterans that you deal with, or the veterans and others that you deal with, mainly you make sure that they are pre-underwritten, correct? When you shop them with the multiple lenders?
Absolutely. So, there's a lot of different clever terms that they use when you're getting finance, right? You have pre-approval, pre-qualification, different things like that. It used to be standard definitions for both of those words.
Yeah.
So now you really got to actually ask the lender what that means, right? Because when you talk about pre-qualified, that just means, hey, this person called me on the phone, said they make this amount of money, said they had this credit score, said, they don't have no car payments, no late payments, and no credit cards. And I approved them based on what they told me. That's usually what a pre-qualification meant. Then you have a pre-approval where it's oftentimes a lot more solid, where they actually got those documents from you. They verified, they check credit, different things like that. And then you have higher layers to that process where you have lenders that'll go above and beyond and get it pre-underwritten. And what that means is they'll take that information from the pre-approval and send that to an underwriter, have them actually look at that, or whether they're doing it through the software or what have you. And they'll go through that process that you actually need to purchase that home, to really make sure that you have that stamp of approval, that you won't need any additional information, and it can be closed on that loan product.
Yeah, and I know, just based on experiences of some home purchases I have, went through my family. It's always better to be safe, right? When you're going through the process, make sure that you're pre-underwritten. Some lenders won't even actually do that for you. Well, I'll tell you, that's probably not the lender for you. Because you want to make sure that, because again, I'm not going to stretch this enough, it's the largest purchase you're going to make of your lifetime, typically, most. So with that said, make sure it's safe, because there's so many different circumstances where that you can be purchasing a home. Luckily for yourself, you obviously have multiple properties, and this was a secondary property, right?
Well, yeah, it was. It was another property, but I was looking to move into that particular property.
So yeah. So again, that circumstance, that is again a very bad circumstance for any family. Mm-hmm. You're moving out of one place, moving into the next place, which most people are coming from renting a property to moving, or this property is already sold and they're moving into another property, and your lender says we cannot fund the loan.
Yeah, absolutely.
What does that do?
Yeah. It could leave you stranded, right? Especially in that time, because you think back to it, and it's very difficult again to get a property under contract. And, I have some kind of different, gems regarding that on how you want to approach it. And one of the things that I kind of helped my clients during that time was that you had Zillow buying a lot of homes. You had Open Door buying a lot of homes as well. Well, even though the market was really competitive, a lot of their listings stayed on the market a lot longer because they usually have terrible pictures. They have terrible pictures. They do, and even, some traditional sellers that don't have the greatest real estate agents, homes with terrible pictures might not be that terrible, and those were the homes that I was able to hey, let's go check that out. And even one for myself. So I ended up buying a house from Open Door. It was on the market for I think 115 days or so. And at that time, because this is October of 21, I believe, and stuff was flying off the market. But that particular home stayed on the market very long because they were price gouging, right, trying to time the market. So they had it listed very high, and they started coming down. And, just being knowledgeable, I knew it's they didn't come down as much as I want them to, but I know it's approaching that 120-day mark, so they about to drop it another 15,000. Well, that's the price I want to buy, but I'm gonna come and offer them that price now, 5 days before they drop it, and most likely they're gonna accept it, which they did, right? So
hold on. I don't think everyone really kind of understood that, right? As this is why we always talk about getting getting what you pay for always, right? But this is a skilled realtor strategy, right? The understanding and researching and knowing the area, knowing the property that he's looking for, knowing the price point he wants to go in, but then actually approached it by going in literally 5 days before the average price drop was happening through the multiple price drops that transpired. So he was able to be one of the first bidders at that time, right?
absolutely.
Listen, that, hey, all realtors aren't equal. So that's what we'll say. That's what we'll say. There's multiple strategies. But I'm sorry, I didn't mean to interrupt. I want to let you finish it. I just wanted to make sure the audience understood that.
No, absolutely, and that's a great point, and it's a great strategy because when you're working with those companies, right, they don't look at multiple offers anyway. When you go and if you've ever submitted an offer for Open Door or even Zillow, Redfin, a lot of those places, once an offer is submitted, they reply in a certain amount of times. They may allow you to submit a backup offer, but they're not looking at that backup offer until they decided on that first one. So you're oftentimes not going to get in a situation, you're less likely to get in a bidding war, especially if you're offering list price or somewhere around the range that they're looking to accept. So, that's a great strategy on how to get a home. And again, I mean, interest rates are higher right now, but there's so many different options and so many different ways in this market to still purchase real estate. And the main thing that we wanted to stress here regarding buying a home right after service is just make sure that you're knowledgeable, but also make sure that you hire knowledgeable professionals, because we just gave the example on how that could make or break you being able to purchase a property, right? Because with the VA loan, there's going to be lenders telling you different things regarding their overlays, whether they're going to accept it. Is that lender going to go to bat for you? Is that lender even knowledgeable of the VA loan? That lender company might offer 10 different products. If they don't deal with a VA loan on a regular basis, they may not know much about it. And even if they close those loans on a semi-regular basis, they still might not know a lot of details about it because they don't specialize with working with veterans and active duty service members. So you want to always get someone that it specializes in working with what you're looking to do, whether you're looking to get an investment property, whether you're looking to utilize your VA loan for primary residence.